Very good morning, friends. Today, we are going to revise an interesting topic called a reconciliation statement. First, we will understand what is the overview of reconciliation statement. See, we know there are two types of maintenance of books of accounts. One is called a integrated, another one is called non-integrated. One is called integrated, another one is called non-integrated. What is mean by integrated? What is mean by non-integrated? Non-integrated means what? Costing records and financial records are kept separately or maintained separately. What is it by integrated? Financial and costing are prepared together. Costing and financial are prepared together. So now what this reconciliation, my dear friends, if you are prepared separately, if you are prepared separately, means costing separate, financial separate, you will have a costing profit, you will have a financial profit, you will have a costing profit, you will have a financial profit. So management want to know why this profit is different. Just like when you prepare a cash book and bank book, you have two books. One is bank records, one is your company records. There will be two closing balance because of different reasons. You prepare bank reconciliation statement. Why this cash book and bank passbook is different? Same logic only. When you prepare a two profitability statement, you want to know what are all the reasons accounting profit and financial profit is different. That only we discussed under a chapter called what? Profit reconciliation. Profit reconciliation. A very interesting area. Profit reconciliation or cost sheet or integrated or integrated. Out of these three, always one question comes. Out of this, all the three are interrelated. All the three are interrelated. So out of these three, one question always comes. So how a profit reconciliation prepared? My dear friends, profit reconciliation is a revision session. So let me tell you in a detailed way. Profit reconciliation statement we can prepare two ways. We did majority of question only one way, but in revision I will tell you both. You want to prepare two way. First one it is statement method we call profit reconciliation statement. There is a one more method, memorandum account. So if question comes for your exam, first you have to look into whether they are asking profit reconciliation statement or profit memorandum account. What is a memorandum account? Memorandum account you have to prepare in a T form. You have to prepare in a T form. We discussed both the method in our class. We prepared in a T form. Whereas profit reconciliation statement is a normal statement rule. Profit reconciliation statement is a normal statement rule. How and all this question will come? There are three type of question will come. There are three type of question will come. Type number one is question itself will give you cost profit and financial profit and the reason why this profit is different. The reason why the profit is different. Type number two, question will give you any one profit only, financial alone. They will given the reason. They will ask you what is the costing. Or they will be given costing alone. They will give you the reason. They will ask you what is the financial. Type 3 is very interesting. They will give you data for financial. They will give you data for costing. They will ask you prepare a cost sheet, prepare a profit, prepare a P&L. Then you go for what? Reconciliation. That is a standard question. So in this revision class, we'll do that standard one question also. We'll do that one standard consolidated question. So when you do one standard consolidated question, it will be very easy. In your class workbook, you have already written the shortcut format. You can just check in your notebook also. In your class notebook, you might have already prepared a short notebook. Short note. What is a short book? This is very easy for you to recall. See, if you start with a profit as per, let's say I'm going to start with which one I will give, my difference. Okay, if I give profit as per financial, we can give two way. As I told, we can prepare either costing or financial. But if question is given only costing, then you can't go for financial. You can go only with what? Costing. See now, if you prepare with a profit as per financial, few items you have to remember. That's all. You can able to solve anything. That is, see, if you prepare profit as per financial, some of the items you have to add, some of the item you have to less. That's all. Some of the item you have to add, some of the item you have to less. One simple point. See, in financial, we have to understand what role the reason profit differ. This, if you understand, you can able to get this statement very easy. What was the reason financial profit and costing profit differ? The reason financial profit and costing profit is because of main few reasons. First one, income only in financial accounts, not in cost accounts. Lot of income from investment, then income from deposits, all those income only in financial. Next day, profit from trading activities, profit from sale of asset or trading activity. This also only in financial. Now, if you do this income only in financial, same ulta you have expense only in financial account. Expense only in financial accounts. Example, CSR expense is all issue expenses. Depreciation will be there in both. So you have to make it that different perspective. Clear? So expense only in financial accounts. This return of goodwill, return of preliminary expense, all are examples which only in your financial. Next one it is the loss on sale. If you take profit, then you have to take what? Loss on sale of asset, or you can have loss on trading activity. All this only in what? Financial. All this only in what? Financial. I understand these both are ulta parameter. Next one it is very interesting. See, that is what is called under recovery or over recovery. What is under recovery or over recovery? In the last session also, revision session also, we discussed under absorption and over absorption. What is this under absorption? What is this over absorption, my dear friends? See, under absorption means costing you charged a lesser amount. Over absorption means what? Costing you charged more amount. So under absorption also one of the reason, that is the next area, that is under or over absorption. Are you understanding? Let's say difference in depreciation. This is also an example of over or under. Though I am thinking it. See, depreciation will occur in both the books. But sometimes in financial you will follow WDV, costing you follow what? SL. Because of the reason also it will be. Are you getting? Apart from this, finally, difference in valuation of stock. That is both opening stock and closing stock. Both opening stock and closing stock. In costing, there will be higher value. Financially be less value. So over value in cost accounts. Under value like that, it will be there. This is a major item which will come under this item. Apart from this, if point purpose, you can take another one point that called a expense only in costing. This is very rarely will be there. Expense only in costing or income only in costing. This is very rarely because we know what is the full form of financial accounts. What is the full form of financial accounts? That is all the monetary transactions. In costing only relating to production only will come. So very rarely. If it is any non-operating opportunity cost something and all, if you consider that is what expense. That is this is very rarely will be there. If it is anything, it will come. Clear? So this difference in depreciation and sometimes repair expense, these are all items will come. Difference in repair. See, in financial, you will charge full amount. But in costing, you will charge on the basis of usefulness. Costing will change on the basis of what? Usefulness. So difference in it. These are all the reasons. So once you understand this reason very well, you can able to prepare this statement very easy. How? See, your profit as per financial you are starting. See, in the classroom, I have given a shortcut method. I'll repeat again shortcut method now itself. See, your last point is what? You want to get what? Profit as per cost accounts. See, in the classroom, I have told you shortcut account. See, you want to look in the perspective of your cost accounts. I have told you two things. Remember the format, that is enough. Or second method is concept. Now I'm telling the concept revision again. See, if you are doing profit as per cost accounts, if you're doing profit as per cost, you have to understand what is the target. So you're going to find out cost accounts. So target if profit increasing, add. Target profit decreasing, you have to less. That's all. Now let's start. See, there is an item called the expense only in financial. If expense only in financial, expenses more in financial account. So financial expense is more, financial profit will be what? Less. If financial profit is less, costing profit will be what? High. That means sometimes some friends will think, see, both are 1,000, 10,000, 10,000. Now financial alone, 1,000 rupees expense coming. So financial profit will become what? 9,000. Cost profit will be still what? 10,000. That is why I tell that if financial some expense come, financial profit will reduce. Cost profit compared to that, it will be more. How much it will more? It will more by this amount. And understand? That is all. This is a shortcut method for you to understand. But format, remember itself is enough. You have already format. Since revision, but totally forget. So what happened? Here the point expense. See, expense loss are same meaning. So you can point what expense loss only in financial. Next one it is income. See, just go ulta. You are having some income only in financial. Income only in financial. Financial will be higher. Costing will be lot loss. So your target is costing. It is less. Another way is one shortcut. If expense is added, what you have to do? Income or profit, you have to list. This is how the shortcut. So only in financial. See, now we'll go for under absorption. See, your under absorption means what? You charged a lower amount in costing. So if you charge lower amount in costing, I will show you example. Here we charged 800. Here we charge what? 800. In costing, you charge only 600. This is what? Costing less, under absorption. So you look here where the profit is less. I have given the formula. Tell my difference. Here you charge 800. Here you charge is what? 600. Where the profit is more. This is what cost accounts. This is what financial accounts. Where the profit is more. So if you under absorption is there, cost profit will be what? More. If cost profit is more, you have to add. So you have to go for what? Under absorption. So already these are all with you there in the book itself. Here will come what? Here it will come what? Over absorption. Now here there is a point. So we consider these two. We taken these two. This is also over. Now we have one item. Difference in depreciation amount, difference in repair amount. These kind of items I told treat as a perspective of what over or under. What is over or under? You just take what is the depreciation taken? Depreciation taken 1,200. Here depreciation taken 1,100. So same logic only. That means depreciation also under absorption or absorption treatment you go. What is the financial amount? What is the costing amount? If costing charges less, it's an under absorption. What is under absorption treatment? You have to add. If costing you charge more, depreciation you charge more, repair you charge more, then costing is what? Over absorption. If over absorption, what you have to do? Yes. That means for this item, you don't want to learn anything new. The same logic of under absorption. Why don't I call under absorption or absorption? Under absorption or absorption technical term used only for overhead. This way is kept as a separate, but treatment is both are. Now, last one. Difference in stock. I have told you this we don't want to write in format. I don't know whether you written in the format. It's very easy. If stock closing stock is overvalued, profit will increase. So if costing closing stock is overvalued, you have to add. If financial closing stock is overvalued, you have to less. The reason is what? Financial only profit will more. Costing profit is what? But if opening stock is overvalued, profit will reduce. That is the only point. So any item you can be able to cover up for this. Sir, this is profit as per financial. What will happen if it is costing? See, if it is a costing, just the reversal only. That is, if you start with profit as per costing, profit as per cost accounts, the same thing, what happened it is, you add item. Yes, this item you have to add, just the reversal. And this will be, that is speciality. If you learn one item, any method you can able to get it. Are you clear? The only difference is what? So this format already in your notebook. I just want to revise the launch. Okay. So what we are going to revise here? We are going to revise a consolidated essay question. You are going to do consolidate one essay question. So if you do that consolidate one essay question, cost sheet you will get a one small reshare. Trading profit and loss account will do it. Then profit and loss also will do it. And which question we'll do? Mostly we will do one question which we given as a homework. One question alone we don't need. We given as a homework. Can anyone tell which question that we given as a homework? One essay question we given as a homework. Yes, 131. So we'll go for 131, my dear friends. Hope all of you are ready. Shall we proceed 131? All of you ready? Consolidate question. You will get the revision of everything. This is a essay model question. The following figures have been extracted from the financial records of a manufacturing for the first year of operation. They say direct material consumption, direct wage. So this all data is what? Financial accounts. This all data is what? Financial accounts. How you will understand? From the financial accounts. The cost accounts for the same period revealed the direct material consumption is what? 56. Factory overhead 20%, admin overhead, selling overhead. You are required to prepare costing and financial profit and loss account, and also reconcile the difference in profit of two sets of account. A consolidated essay question. Shall we start? So first we will go forward profit and loss account. First we will go forward profit and loss account. You are expert in profit and loss account, I know, but still I will help you, my dear friends. So how you will prepare, my dear friends? Yes. Now material is what? Now we can take each item. So direct material. In financial, what is the amount we have taken, friends? What is the amount? 50 lakh. Next we have direct wages. So what is the direct wages? 30 lakh. Then we have what? Factory overhead. What is the factory overhead, friends? Factory overhead is 60 lakh. Now here, sales 120 lakh by WAP. See, WAP they said 2 lakh 40 by closing stock. Closing stock 3 lakh 20. Now what you have to do? Debit side is more, credit side is more. Obviously, it's a credit side is more. If I'm not wrong, the answer will be what? See, if you are little slow, you can just revise with your notebook note also. Okay, nothing wrong in that. You have to revise, that's all. So what is the gross profit, friends? Gross profit, you'll get 29 lakh 60,000. Now you can come what here? All the expenses. What are all the expenses we have? Admin overhead. We have what? Selling overhead. We have what? Bad debt. See, very easy. They given already item. We just want to classify the column only. Bad debt. To preliminary expense return off. To legal charges. Dividend received. dividend received, interest on deposits. Next, that's all. So can anyone tell me what is the admin amount? 7 lakhs selling, 9 lakhs bad debt, 80,000, 40,000, 10,000. Interest on dividend, interest on, yes. Now what you can do now, we have to just brought down first our gross profit. So it's a revision purpose. You can just listen very well, or if you wish, you can also copy it, but if you be very fast. Okay, so you will get this point. The difference is called profit as per financial accounts. See some question, this see if you go through our class, we did few questions. P and L already will be given. See this question and all. P and L is already given. This question is little bit advanced. P and L itself is not. Now cost sheet. You have to prepare the cost sheet. So what is the point we have to consider in cost sheet, friends? Direct material. What is the direct material? 56 lakh. See, direct labor, they are silent. So direct labor in costing and financial both will be same because it's actual basis. So direct labor, it will be silent means that doesn't mean that there is no direct labor. That is what? Same. So next is what? Prime cost. Now you have to add factory overhead. What is the factory overhead? They said that 20% on your prime cost. 20% on what? Prime. Are you able to understand? Are you able to revise? Now you will have factory overhead. See, this is what called factory cost. Now you have to add a opening WAP. There is no opening WAP, but there is a closing. My dear friends, for your information, financial and costing both WAP at cost only. So both value will be remain same. Both value will be remain same for WAP. So both are cost only. So WAP you have to take what? 2 lakh 40. So your net factory cost will be net factory cost will be 10 lakh. Now you have to add what? Admin overhead. What is admin overhead? Admin overhead is 6 per production. So production we have to find out. A standard question, they won't give you production. We want to find it. Here, they don't say anywhere production is so and so unit. Production is not given, you have to find out. Production is nothing but what is your sales plus finished stock minus opening. Sales plus finished stock minus opening. Sales is 1 lakh 20. Finished stock is what? 4,000 minus opening. Opening is nothing mentioned 0. This you can recall with your budgeting chapter. In budgeting, you prepare production budget. What is the formula for production budget? You estimated sales, add a desired closing, less operating, the same thing. Because you can internally get benefit of that. So you will get what, my dear friends? Add admin overhead. What is admin overhead? Yes, admin overhead. We have 1 lakh 24 unit. How we got 1 lakh 24,000, my dear friends? 1 lakh 20 we sold plus 4,000 closing. There is no opening, and the price is what? 6 rupee. And the price is what? 6 rupee. You will get what? 7 lakh 44. You will get what? 7 lakh 44. If you take this total, this is what is called cost of production. Now the main point, we don't have no opening. There is no opening. Opening is not there, but there is a closing. See, very important. In costing, we won't take a same closing stock of financials because financial, you might have already learned in your financial accounting card. Stock will be valued at cost or NRV, whichever is lower. Cost or NRV, whichever is lower. But in costing, at the cost only. In costing is what? At the cost only. So what you do now, there is a small formula. You might have it written in your cost sheet format. That is, what is your cost of production? Divided by how many units you produced? 1 lakh 24. So you will get what is the cost for 1 unit. You get what is the cost for 1 unit into number of units. Into number of units. What is the number of units, my dear friends? 4,000. Are you clear? So closing unit. This is how we have to approach. Hope all of you are clear. So if I put this, I'll get closing stock. This is the value. Now if I enter, this is what is called cost of goods sold. Cost of goods sold. Now we have to go for what? Selling overhead. Selling overhead, what they said, 8 per unit sold. How many units sold? 1 lakh 20 into 8. How interesting, friends. This is what is called cost of sales. Sales value we don't know already. We know already. What is the sales value? Sales value is what? 120 lakh. Correct? 120 lakh. So the difference is what? Profit. This profit is called profit as per cost accounts. This profit is what? Profit as per cost accounts. See, let me tell you a very basic question. Very basic question. If you take this item, this is a very basic question. Here, the reason for difference they will mention in the question itself. See, the reason for difference they will be mentioned in the question itself. Are you able to understand? But a standard essay model question like this, here the reason will not mention. You have to analyze both the table. You have financial, you have costing. You want to analyze what is the reason. How? Here factory overhead 60 lakh. Here factory overhead is what? 70 lakh. So costing is more. If costing is more, or recovery. Here admin is 7. Here admin is what? 1 point. Again over recovery. See, here selling is 9. Here selling is 9 lakh 60. Again is what? Over. See, bad debt is here, but it is not there. So expense only in what? Financial. Preliminary is here, but not here. Expense only in financial. Here, dividend and interest on deposits only in financial, but not in costing. So you will have to identify each one by item. If you go here, here the closing stock is 3 lakh 20, but here the closing stock is what? 3 lakh 40. So different. Finally, material consumption is here 56 lakh, but here it is what? I understood. So this is how we have to understand. Now you can start it. If you are starting now, it is your wish whether to start with cost profit or financial profit because you have both the data. If you have both the data, you can either start with cost profit or financial profit. You tell me which profit I want to start. So which one I will start? So statement of profit reconciliation. Tell my dear friends, which one I will do? Financial. So profit as per financial accounts. What is the profit as per financial accounts, friends? financial accounts 30 lakh 50 if I am not wrong. Yes or no, friends? 30 lakh 50 if I am not wrong. Now you have to do what? You have to go for the point. Tell my dear friends, what is the heading you have written? Profit as per financial and expenses or losses only in financial accounts and also under recovery. Yes or no, friends? Shall we start? Yes. Tell me the first item. The expense or loss only in financial accounts. We have bad debt. What is the amount of bad debt? What is the bad debt amount? 80,000. What is the next item? Preliminary expense. What is the amount? 40,000. Then we have to go for under recovery. Any under recovery is there? Legal charges. One more item expense. Legal charges. We have to go for what is the amount of 10,000. Any under recovery is there? No. All are over recovery only. Now you have to go for your effect of stock. Finished goods, what is the effect? In financial, you have a finished stock of what? 3 lakh 49. Here the finished stock value is what? 3 lakh 20. In costing, 3 lakh 49, costing value is more. Closing stock is more, profit will be also more. I told you closing stock is more, profit also more. So now we are going to find out cost profit. We are going to find out cost profit. Our target is what? Cost profit. In cost profit, profit is more. If cost profit, profit is more, we have to add. We have to add. Understand this talk, some friends small house, small doubt. That is what I am telling you. See, cost profit is higher. Your target is cost that you have to look into. If you start with profit as per cost accounts, then you have to less only. If you start with profit as per cost account, then you have to less only. But you start with what? Profit as per financial. If you start with profit as per financial, my dear friends, how you have to look into? So, if you start with profit as per financial, what you have to look into now? You have to go for what is your target. This is what you have to do. Profit as per cost accounts. So, if your target is cost accounts, then you have to look what is the effective costing. If effective costing is profit more, then add. Effective costing is profit is less, then less. This is the logic. You don't make any mistake. So you have to look into this parameter. If you take this parameter, then no. You have to take what profit you're doing. So costing, more value. More value means more profit. So you have to add it. So you have to return here difference in closing stock. Difference in closing stock. What is the value, my dear friends? 3 lakh 49 minus you have 3 lakh 20, the difference. Are you clear, friends? Yes or no? Now you can go for the next item, your favorite item. What's your favorite item? Less. Here you have to go for income or profit only in financial accounts. Then there is called power return. Now, income profit only in cost accounts. Very easy. We identified the profit and all. Tell my dear friends, what are the profit? Sorry? Dividend. What is the amount? 1 lakh. Interest on deposits. 20,000. Next. Over absorption of factory overhead. 1 lakh 20. We have admin overhead. 60,000. We have one more over. See how you get 44,000, my dear friends. You have to look into here. Here we have admin overhead is what? 7 lakh. Here we have admin overhead is what? 7 lakh. Here we have admin overhead is what? 7 lakh. The difference. Yes. What is next, friends? Dwelling on distribution also overwritten. Now you have to check anything missing. Any item missing, my friends? Yes. We have to go one more overvaluation of material also. What is the amount? So now you can just check it. It will be tallied, my dear friends. That is speciality of this chapter. This chapter never make any error. If you are pakka, you will get exactly the answer, and you can also check whether your answer is correct. I should get now this 5,65,000. We're getting exactly. Suppose if you are getting small difference, you can check why it happens. So this is a consolidated question. You can be able to everything in this chapter. So I am not going to end with this. I am going to tell the same thing memorandum account also, because sometimes exam they will come memorandum. In the class we did a majority question statement only. Only one question only we have get maybe memorandum. But exam if they come memorandum, unnecessarily will miss the mark. So how it will be if it is a memorandum account, my dear friends? Memorandum reconciliation account. If it is a memorandum reconciliation account, it's the same logic only. Some friends maybe forgot this. I'm revising now. Memorandum reconciliation account is a T form. It's a T form. Same thing. One column for particulars. One column for what? The amount. One column for particulars. One column for what? The amount. Now what we have to do, my dear friends? Now you have to start with any one profit. Here in this example, we are starting with what? Profit as per financial. See, if it is a profit, it has to be written in the credit side. If it is a profit, it has to be written in the credit side. If it is a loss, if it is a loss, it has to be written in the debit side. Are you clear? That's all. Now, which are all you have to add that has to return in the debit side. So I am just making here add all the item will come in debit side. So just for understanding, I am not giving two unknown. Generally in memorandum reconciliation account, you have to put it as what? Two. Are you clear? Now, which are all you have to deduct that you have to return in the credit side. So it's a revision time. So you know this memorandum reconciliation, you may not be able to copy now parallelly because I'm doing it very fast. You should not do A, B, C, D. You have to do two divided two interest. I'm just copying for time saving, so it will be like that. Are you able to understand, friends? So profit it has to be come in the credit side, add it will come in the debit side, less it has to come in the debit side. Now all the item we have to take it. So it's better what we have to recall the point rather than copying. You can also copy later also not a problem. Are you able to get it? Now you can able to go for it. How you have to check credit side more, debit side more. You have to check credit side more, debit side more. So what you will get it. One small correction, let me tell you. Yes, yes. One small correction. We have taken this column. One small correction. Yes, one second. See, this is this less. It has to come here. Less. It has to come here. I take a wrong column. This it has to come. So I have taken this now here. Okay. Now what you have to reduce that has to come here. Add. That's all. Answer is all. Now you have to start your step. Debit side more or credit side more. So here credit side only more. So I'm taking it. If credit side is more, we can check it, then we can take it. See here only more. So then it is called profit. If debit side is more, it is a loss. Just like our P&L concept. P&L, if credit side is more, it's a profit. Debit side is more, it's a loss. Now this item, this difference. So nothing new. This item, everything same. Only presentation only changing. Same 5 lakh SPP you are getting. This we call profit as per cost. How interesting. So you have to look into the exam if question comes. It's a statement or a reconciliation account, memorandum account. So if it is account, this is the format. If it is a statement, this is the format. Hope you are very clear. So this one consolidated question, I believe you will be able to recall this point entirely in detail. Okay. So what I request you now, please take your own time and revise this chapter very well. Fill it out, please ask. Then we will move into the next chapter. Okay.